Third quarter of 2025 carried a tone of cautious optimism. It wasn't a quarter of exuberant rallies, nor was it one of sharp declines. Instead, markets and economies balanced fading growth momentum, easing inflation, and expectations for central bank rate relief. Now, for Matco's Balance Fund, built for measured growth and resilience, these months reinforced the value of disciplined positioning and diversified exposure. Three developments really stood out this quarter. First, central banks shifted to easing with the Bank of Canada and the Fed cutting rates in September. Second, Canada's economic data remained uneven. July GDP surprised to the upside, but manufacturing weakness deepened by quarter end. Third, equity markets advanced, particularly outside North America, while fixed income provided stability and income. Now turning to Canada, the economy briefly regained its footing in July, with a modest GDP rebound led by energy and manufacturing, but momentum quickly faded as manufacturing contracted further in September. Now, this broader trend has been weaker. Canada's most recent quarterly GDP print showed a 1.6% annualized contraction. Inflation, though easing, continued to pressure households and dampen business investment. In September, the Bank of Canada responded with its first rate cut since March, lowering the overnight rate to 2.5%. The move acknowledged softer conditions while providing support for borrowers and for capital markets. Globally speaking, conditions were somewhat brighter. Growth expectations stabilized, inflation trended lower, and central banks abroad signaled a bias toward easing. Notably, the U.S. Federal Reserve also cut rates in September. Even so, non-U.S. equity still outpaced North American, supported by better valuations and stronger capital flows. Credit markets remain constructive with investment-grade spreads steady, though late-cycle caution did persist. Now, just to recap, rate cuts supported both bonds and equities. Canada's economy remained fragile despite brief summer strength. Equity gains were broad-based, but strongest outside of North America. Now, against this backdrop, Matco's Balance Fund remained firmly diversified, delivering a 6.5% return in the third quarter alone. Year to date, the fund is up a healthy 12.8%. Our fixed income sleeve, anchored by Matco's diversified income strategy, acted as a ballast, delivering consistent income and cushioning for market volatility. We maintained a focus on medium-term positioning, which should benefit most from follow-through rate cuts. Now, on the equity side of the portfolio, Canadian exposure emphasized stable dividend-paying businesses and companies with pricing power. At the same time, global allocations provided diversification, particularly in Europe, where valuations are more attractive. Across both regions, we've avoided companies with excessive trade exposure and stretched valuations. The opportunity strategy at a 10% allocation in the fund continues to deliver strong results and gives us flexibility to lean into those selective opportunities. In conclusion, Q3 was not about euphoria or panic. It was about managing transition. As we enter the final quarter of 2025, we remain vigilant. If economic signals and valuations improve, we are prepared to add equity exposure for growth within the portfolio. If headwinds persist, our income foundation and diversification will continue to protect capital. Through it all, Matco's Balance Fund remains focused on delivering stability today while building for growth tomorrow.